Meantime, we're taking your questions on today's show, so let's dive right in. Our first question comes to us from Sean in Little Rock. Sean sent in an email and writes, I hear you mention annuities on your show quite often. You say they can be used to have guaranteed income in retirement. Can you explain how much you have to invest into an annuity and how much income that money would produce to you a month in retirement? Sean, thanks very much for the question. A couple of hows in there, and we're going to answer that, but we're also going to need to get to why, because that's a real important question to answer too. Why an annuity, if it makes sense? But our disclaimer first, that they like us to say, annuities are insurance contracts that may carry fees, charges, and restrictions. You should consider the contract carefully before purchasing. Guarantees are based on the claims paying ability of the issuing insurance company. So when we talk about annuities, Janet, in a client room, the first thing I start off with is what is your perception? What do you know about annuities? Because annuities is such a large, it covers so much ground and can mean so many different things that it's important to know what kind of annuity we're talking about.
Scott, one of the things you mentioned as we were preparing for this show was that many people, in fact, even call their pension an annuity. Now, technically, there is a difference there, but the reason they're using that word, if we think about where the word comes from, it's the same root word as annual, and what it means is that you're getting an annual payout. It's usually broken down monthly instead of just once per year, but you're getting an annual amount of money from this source. And so that's why some people, attribute that word also to their pensions. But we want to look at what is done by an insurance company and in different forms. So this is an investment product that is for sure offered by an insurance company. And they have inside of this, they can work differently. So you might have a variable annuity with sub-accounts. Sub-accounts are different than mutual funds, but for the layperson's understanding of what it is, it kind of has the same function as like a mutual fund would have. You might have a fixed annuity that has a guaranteed interest rate, and you might have an indexed annuity that's going to be tied to the performance of an index, whether it's a stock index, bond index, etc.
So that talks about the performance inside of that annuity vehicle. So if you think about an annuity having the wrapper around the type of account you have, and they come with surrender charges oftentimes that you're going to have to park that money for a certain length of time and cannot withdraw more than usually about 10% of it, or you're going to be charged a penalty. So you need to know that they're long-term products as well. But then past what type of investment you're in that Janet went over, the question from Sean asked about guaranteed income. So any of these annuities, any of those types of annuities can be offered from an insurance company or by an insurance company with a guaranteed income rider. So you think about it when it rides on top of the product, and for a fee, an additional fee, you are charged to have that rider ride on top, and it is a guaranteed income amount that can be taken either annually or monthly in most cases for the rest of your life. And that is to Sean's question. So he asks, how much do you have to invest into an annuity? There are minimums. They're usually very low, sometimes around $25,000, again, depending on the type of annuity you're talking about and the insurance carrier. How much income that would produce to you a month also varies based on the type of annuity. But as a general rule, Janet, you're talking about a withdrawal percentage around 5% of the premium amount or whatever the income base ends up at. And we don't want to go too far into the weeds here, but basically there's going to be a number that withdrawal percentage is based on when you begin receiving income, and it's around 5% a year.
Right. So when you go back to in Sean's question, when he talks about, how much do you have to invest, and we've addressed the question of like what is required as far as a minimum, but then you want to look at how much do you need to invest and how much makes sense. For example, if somebody put $25,000 into an annuity for the purpose of using it for an income source. Well, if you get 5% of $25,000 and it's stretched out over a 12-month period of time, it's not a whole lot of income that we're talking about. So the question is, why would you even guarantee that amount of income? Does it make sense to have that small of an amount? And some people will seed it with a smaller amount and then add over the years. That's a different scenario. But if you're at the point of taking income, and income is your purpose, then you're probably going to want to have more money in this. And really, we look at this, Scott, very formulaically. It is literally this process of questions that we go through, and we will ask things like, I'll use this as an example. We might ask Mr. and Mrs. Smith, how much money do you have to have every single month coming in on a guaranteed basis just to cover your required expenses? We're not talking about desired income that would cover, vacations and spoiling the grandkids and those types of things. What is your required income need? Let's say that they tell us that they have to have $4,000 a month, and we look at their Social Security income, and let's say they also have a pension, and they've said they have to have $4,000 a month. Well, between Social Security and pension income, they have $5,000. So their required income needs are already met through guaranteed sources of income. We would look at that and say you don't need to have an annuity for the purpose of income. But let's flip this answer, or this scenario rather, for them and say, okay, now they've said they have to have $5,000 a month. They don't have a pension. They have 2 Social Security checks that total $4,000. So now, Scott, we have a $1,000 gap. And in that scenario, we at GenWealth would say you need to fill that with an annuity to cover that gap so that you know that regardless of what happens, you have that guaranteed amount of income coming in. And Scott, this causes people to face a crisis in the market very differently because we have checked the box on security at the beginning, and we know that regardless of what happens, these guarantees are in place.
Yeah, and I think that that brings up the point that we make all the time, that it's plan before product.
Right.
It should be the plan that determines what investment products you have, Sean. So don't go get an annuity just because it offers guaranteed lifetime income. Get an annuity only if you need one, right? And the process of planning determines that answer. And I think that's a great question from Sean, and I think it's an important one too. I do want to circle back to one thing I said about 5%. That is usually for single life and usually at age 65, right? So there are all kinds of variables on how large that withdrawal percentage will be. You can also get those income riders that have joint life income on them, so you and your spouse would actually be covered for both of your lives. So there's a lot of variables involved, and you really need the guidance of a financial advisor and a plan to basically determine whether you need an annuity or not. And it's particularly important to do that now more than ever, because we've talked about this in the past too. There is legislation. We are headed down a path of potentially having annuities offered inside of 401ks, inside of employer-sponsored plans. And you think about a 35-year-old who is building wealth, trying to get to true financial independence later in life, 30 years down the road. He may like the sound of guaranteed income, right? And he may be in a high-fee guaranteed income product way before he needs it.
Scott, there is a plan. I'm not going to name it, but there is a plan that we have seen that already has an annuity built in. And I will tell you that of all the people I've ever met with who have it, and it's a pretty significant number, of all the people I've ever met with who have it, there was only one who understood the parameters on it. In that particular annuity inside of their retirement plan offered by their employer, they cannot take the money out in less than a 10-year time period. My line used to be, and I know God could do this, but my line used to be, God himself could not get this out of this annuity within a time period less than 10 years. And so, like, we had a client years ago who had $300,000 in that and could not access it as retirement income at the time that she turned 65 and was ready to retire. She thought she had full access to that and didn't. So I'm just going to say, if this widens to be allowed in most retirement plans, be aware of how they work. Understand what's in there. Annuities are complex products, and we believe there is absolutely a time and a place to use them. They have been very helpful to our clients over the years here at GenWealth, but there are many times when you don't need them, and it's just important to have an understanding of what they are and how they work, because they are not all created equally.
One final word I've got for that, when we talked about the Jeffrey Roach event and being educated, and sometimes education requires a commitment, a time commitment, because we live in this soundbite world, this the short message, short attention span world, you'll also hear out there, I hate annuities, right? You'll hear the marketing mantra that they're all bad, right? Well, we just went through the complexity of it,
right?
And how many different kinds there are, and how many uses there could be. Don't start with a blanket statement and get your feelings about annuities basically from one marketing statement, right?
Mm-hmm.
You need to know more about it, educate yourself, and work with a financial advisor and get a plan together before you determine whether you have a need for an annuity or not. Great question. We obviously loved it because we spend a lot of time on it. This is our question of the week. So we want to say congratulations to Sean, and thanks for reaching out with your question. We'd love to send you a free Get Ready for the Future Show tumbler for being the question of the week. So Sean can claim it by sending his email to show@getreadyforthefuture.com. And for future shows, know that if you send in a question for us and we choose it as the question of the week, you could get a Get Ready for the Future Show tumbler. How do you ask a question, Scott? Well, here's how you're going to do it. You can call or you can text to this number, 501-381-5228. That's 501-381-5228. Or you can send an email to the same email I just referenced, show@getreadyforthefuture.com. Ask your question via email, text, or voice, and we could get it on the air. And if you're named the question of the week, we could send you a prize.